This is Eric Muathe at Muathe.com. In this video, I want to share with you an important tip when it comes to deciding what breakout level to use. Now, the first thing I should say is, generally speaking, there is no hard rule as to what constitutes a breakout level. So number one, let's just take care of that. A breakout level is whatever seems logical to you. So let me explain what I'm talking about. So there is a tip I would like to share, which is, let's say there's a closing level there. We can take any time frame, and let's say the stock is trading below that. So this is your breakout level here. And so what happens generally is you'd want it to break out and never look back. And you want this to be your buy point right here. That's the idea with breakouts, right? Buy them on the way up. And of course, you want to time the breakout level. That is an ideal situation. But what tends to happen a lot is, because markets also have an influence, you'll find that stock will break out, form a new high. Okay. In fact, let me take that out so we can have a clean slate. Your initial breakout level. And let's give it a price. Let's call this 22. That's that close right there. And again, you can use intraday highs, weekly highs, intraday highs, closing highs. It's whatever you decide. But mostly I use weekly, monthly, or daily closing highs for me. So let's say a stock breaks out above this number, closes higher on the time frame. So this is a new close. Let's call that 25 just for the sake. That's a 25 level. And then instead of going higher, we go sideways, maybe even below the initial breakout. So sometimes we end up going even below this breakout. Now the question becomes, what's going to be your next buy point? Right? Because this breakout now has failed. This initial breakout here has failed. And now you have a new close. So you have two considerations. You can either use this one, or now you are forced to use the higher breakout level. Let's say you still have an interest in the stock, or most of the time, it is something you have to consider. Why? Because you become aware of the stock here after all of this has taken place. So you become aware of the stock after all of this. So sometimes this is already happened before you become aware of it. And now your question becomes, when you're trying to find your breakout level, it's an important question in a sense, because are you going to use the initial breakout at 22, or are you going to use the breakout at 25? Now here's a pro tip, because most of the time traders are going to go for the higher breakout level. And I want to show you a trick. What you can do actually is use the initial breakout level. In this case, would be 22. And here's the reason. You just account for the following. This here was a failed breakout attempt. So just consider that a failed breakout attempt. That one failed. The next one could be successful. Using this as an entry, this $22 price range. And you can always, if you wanted to, use the higher breakout level. But the idea and the advantage here is you get a lower entry on your breakout. So let me show you an example. So here's an example of a stock that closed here, had a breakout attempt, as you can see here, that failed. So this did not work out, it failed. It went back into its base, into its sideways formation, as you can see right here. So it went back into the base. Hope you can see that. In fact, let me go to a closer time frame. All right, now this is now 1 year of weekly data. So the first breakout did not work out. And so you are forced to make a decision. This one failed breakout. And then you have a new closing high on a weekly basis, which is here. So the question becomes, what breakout level should you use when the stock starts moving higher again, which is this here. Now, as I stated, any of this is valid, and we can see a good example why it's valid, because a good stock is going to take all of those out. The advantage I'm trying to explain here is if you use the previous breakout, which in a way makes sense, because just because it failed doesn't mean it is invalid. It could try again. Like here, there was a failed breakout. The next breakout in this instant was successful. Now remember, a stock can fail to break out many times before finally getting it right. In this example, it came back again and broke out. So this is different. It only took 2 attempts. The second attempt at the breakout was successful in closing above and moving above this prior breakout level. Now, I hope that makes sense. Which, by the way, again, this is now a weekly chart. I want to show you that this is pretty much arbitrary. You can use any breakout level. You could have used on a monthly basis. You could have used this breakout level here after 1 month of rest. So there's many ways to skin this cat. I don't know why you'd want to skin a cat, but hey, it's a saying. Or you could have used this as a breakout level. All of these are valid, so don't get too stressed out on your entry levels. And again, you'll notice here in this example, multiple failed breakouts. Hope you can see that. Failed breakout here, failed breakout here. It comes back on the third try on a monthly basis. It finally clears it. So just understand, not all breakouts work immediately. In fact, some of them don't even work. Some of them eventually fail. So just remember, when it comes to picking breakouts, you can play around with things. You can use monthly breakouts, daily breakouts. In fact, we can see here a breakout in early 2019 that was unsuccessful. And you see what happens here. So not all breakouts are going to work. That's just a fact. That's just the markets. Now let's take a look. Quick example here. Another stock, and this is a 1-year weekly. There's a weekly closing high right there. I'm just using this as an example. And you can see that there was a failed breakout attempt here. Again, it tried again. It failed. So you can still, if you wanted to, use that as a future breakout, while understanding that really it can't go anywhere until it clears the most recent weekly closing high. So either of them is valid. You don't have to wait for the recent weekly closing high. You can go way back here because you understand that the stock has so far been unable to break out above this level. Again, hope you can see it. Ever since this close, all the breakout attempts have been unsuccessful. And so, in a way, you can reason that that breakout still becomes valid, because if it can clear that, finally, it can get some traction. It's another way of saying that don't be too stressed in trying to find the perfect entry level. I don't think there's really such a thing. It really depends on how you look at it, because if a stock is going to have a tremendous run, like this one here, it really doesn't matter whether your breakout level was here or here or here. You just want to find a breakout level that is logical, that you can use for your entry or exit if it doesn't work out. So, past buy points that have not been successful in breaking out can still be future breakout levels. Now, for me, the beauty of monthly breakouts is they give you a better perspective and better entry points. If we go to the monthly, you'll notice that on a monthly chart, this thing is working on month number 2. Now, it might not seem like a lot of a movement, but nevertheless, the breakout on the monthly continues to be successful. Now, compare that monthly breakout at about 220 and the daily breakout. If you're going to wait for the daily closing high to be breached, you're going to wait until 270. So the monthly breakouts are always going to give you, even not always, but most of the time, going to give you better entry points. So as long as the minimum requirements are met, you can use any breakout level that makes sense. It could be on the daily, on the weekly, on the hourly, on the monthly. It's up to you. There is no standard hard rule. Eric Muathe with Muathe.com. Love, light, love. Namaste.